Good morning. Just after 9:15 on Monday morning. It is the 24th of June, 2019. It's E from MarketWizards.com and eMiniWizard.com, reminding traders to use risk capital you can afford to lose. Hope you guys had a great weekend. Reminder that one of the things that I like to do is that I'm most proud of that I've done this last year has been put together the e-widget. It really has made a difference for me. Hands-on, being able to talk to you guys. Obviously, I like to type a little here and there to keep a little written record for you guys too. But most importantly, I have found that just automates it, and it's more accurate than I am. One of the reasons I have redundancy in my spreadsheets is to pick up my mistakes, because a lot of times I will inadvertently forget to update an area or whatever, and this just stays with the timing of the market. So I love it, and I can't say enough for it. And I've actually got another indicator or partial indicator anyways. Don't know if I can leg off of the widget to do it or not, but certainly working on another one that I use a lot in my spreadsheets. So enough about that. Just a reminder that is available. Anybody wants to let me know if they have other platforms they use, Thinkorswim or TradeStation, whatever. If we can get enough interest, then I'll just commission the guy to go ahead and develop, take the code and build it out for that. Anyways, make sure you're using risk capital you can afford to lose. Very, very important that you have longevity and you stay in this game. The only way to do that is to be conservative, in my opinion. Just had a nice little interchange with a friend of mine, Anthony, and as I said, it's easier to knock in your 8-footers than a 40-footer, and it's certainly easier to knock in a 2-footer than an 8-footer, and even those aren't gimmies when you are playing under pressure for money. And you see it all the time, even in the pros. So don't assume that this is an easy game. It's not. It's hindsight makes this game easy. Anybody can make the calls in hindsight. To do it in real time when you have money on the line, that's a different story. And as Brian indicated this morning, let's get a few layups. Let's get those hamstrings stretched out a bit. Let's get the easy ideas first, and that's usually what we call seed capital. And seed capital is the ability to make a few bucks before the market even opens, and then you've got hopefully little seed capital that you can use for bigger trades as the market starts to move a little bit broader ranges, because the big boys are in. Summertime. I always believe that on Friday afternoons, we've got the JV team on the field. The guys are already gone to the Hamptons, and Monday mornings a lot. I feel the same way. They're not even back yet, or certainly not at full strength. So I'm looking at Friday's late range. Here was the high, and that's not been tested. We had a bear flag, and then we had the plunge end of day. But this was a washout type profit-taking swing from the week. And then we've had a nice bounce overnight. I'd say let's use 48 support. The market is held and bounced up. It's come back, and I said, let's use this 62.5, 63 area as our resistance for now. I was thinking these highs at the end of the day are controlling the bounce for now. And so this is a range trade. That's all we've got. I'm thinking neutral for now. Am I thinking neutral for the next 10 days? No. I'm thinking neutral for right now, and that's all we can control. My preference, as I stayed in the room, is to see a little backpedaling coming south side after rollover. But I'm going to be very, very skeptical of anything having a duration today, a one directional move and stay there. I think today's a two-way day. And we've never retested, so we can certainly get above today's high and double top just below or just above, and that would also make sense. So for now, I'm suggesting let's keep an eye on the rain line, which is on a 5-minute chart right here at this 46 area, 47 area. That's going to be an important zone today. If we can get there and test that and get a little bit under it, great. But to stay under that may be a lot harder than anybody thinks. So I'm looking at, obviously, Friday's range being an important idea. And more than likely, we're going to do some range trading today. Here's the 15-minute chart that I have suggested is in play. I've said that I believe that the magnet right now is 56.5. We have not strayed too far from that, so that kind of substantiates my math work. And I've suggested if you are playing short side, be paid by that 56.5 to 55 pre-market, because that's the target pre-market, really. I think hit and run is the way to go. Now here's last week's range, which we could see was a powerhouse up. We can see the end of the day swing and then our bounce. And so realistically, this green and yellow circle are realistically the areas right now that we need to consider as being the range until broken. And I posted the other day that this 45 is probably the key support for now. So today I'm going to look at 45s to 42s as support. If that breaks, then obviously anything goes. And on the upside, we need to contain Friday's high. I think anybody that plays expecting a one-directional day, that would surprise me. So that's just my feeling. You trade your own plan, but I'm just giving you mine. I'm not believing in a one-directional trade. I'm believing in some shorts getting hit, thinking too aggressively. That's probably the first and most important idea in my mind. Don't be too aggressive. Here's our 60.25 is our demon. We've got 53 as our angel, and we're hovering in the middle. What else can I say? Go back and look at Friday's range. Okay, the middle of Friday's range, this core, going to be very important today. Okay, and that's the 61.25 region and the 55.75. So this, and that's why this blue circle is here, to remind us of that is the middle of the range on Friday. So that needs to get resolved today. And I would not be too aggressive in either direction. Those of you who like the short side, I'd suggest hit a bounce or two. I still think that the shorts have to be wary of getting overconfident and saying, okay, we've gone too far too fast. Because they can just do this sideways. They don't have to just bust it south side. They could work it off in time. And we can see the reminder of the 47.25. This is an important idea. This is last year's high. So we're still above that. That needs testing. We've held it a couple of times. But we've got gaps below us, and that's got to be busted and held below to go south side. Before we get back here to this level, that some of you guys have been looking at, you got to bust this one first. You got this big long tail that we got to start to eat. So step by step, we'll keep adjusting as the market gives us new information. Simple as that. Market is going to be opening in a few minutes. And those of you who like the RTY, keeping an eye on this chart. Kind of an important chart for me anyways. I want to keep this perspective in play, and then I keep adjusting this, but this shows me what I need to know, and that blue line is going to be an important above or underline. All right, play well. Those of you who are conservative and want to stay on the sidelines a couple of minutes, up to you. And half gap south side is available this morning. Going to look at somewhere in that 52 area as an important idea for the next support. Play well. Yeah, absolutely. It's been a great month for the longs. And that makes me think perhaps if we're going to get some type of a correction, a time correction may be more appropriate than just a big price correction. I've got 53.75 as the half gap. And we're going to use this current range that we've got identified from the top of the range. We've got Angel 53s, considering that our support, and the Demon going to be back here at this 60.25. So using the top 2/8 for our current resistance for now. And put that into perspective for those of you still somewhat new here, that's this zone right in here. Play that as get paid for sure by 60. And again, first few trades usually are warm-ups. Hopefully get a little traction with a couple of big boys that say, yeah, well, let's take it back a little bit. But again, not thinking home runs, just thinking perhaps better odds to play towards the half gap. And that I'm identifying right back in here, just under these lows. You got this low right here, I think is the key low that I'm identifying right here. Squeeze pivot right there. So don't go looking for home runs. Look for a couple of points if you can get on the scoreboard. And I think the opening rotation will be a lot harder to get a big move south than everybody thinks. Here's our 15-minute chart. We can see very neutral. Still got the support line underneath us. Going to take several attempts today, I believe. And this is our 5-minute chart, our base chart. Rain line below us. And we're coming into the moving averages. Don't forget, some traders got caught at the end of the day on Friday. So some of those traders will be trying to wiggle out a bit. It'll take a little time to rescue them. All right, play well.